So, what do you think about the expansion of the BRICS?
I think a multipolar world is a good thing. And I think that there was no domestic impetus necessarily for the expansion of the BRICS. I think that the biggest enemy of the US dollar is not in Beijing or Moscow, it's in Washington.
Yes.
If you look at what we as Americans made them do, you have to look first of all to the fact that the deepest and most liquid securities market in the world is the US Treasury market. And we're doing our best to wreck it. We're doing our best to wreck it because we're wrecking the credit quality of the issuer, the U.S. government. At the same time that, separate and apart from the CPI, which I think is a fraudulent index, we are we're guaranteeing people negative rates of return. When I construct a basket of the goods and services that I buy, I include government in my index, which the CPI doesn't include. And if you measure your cost of living the way I measure mine, the deterioration of the purchasing power of the U.S. dollar is much closer to 7% than it is to 3%. So with regards to the U.S. Treasury, if you buy a Treasury that's yielding you now 5 in a currency that's losing you 7% a year, the real yield on your Treasury is -2. That's not particularly attractive to the Koreans and the Chinese and the Saudis. And if you put on top of that the weaponization of the U.S. dollar, the fact that if the U.S. government doesn't approve of your policies, they can default, they can cancel on the debt you hold. And if you weaponize it, like we did through the SWIFT banking system, the extraterritorial imposition of U.S. values on the rest of the world guarantees the slow motion decline of the U.S. dollar as the reserves currency. The BRIC currency, I think, is a misnomer. It will not be a currency. There isn't enough gold on the planet, almost irrespective of the price you put on gold, to backstop all of the domestic transactions in a group of countries whose GDP is larger than the G7's.
Yeah.
The idea that they're going to have a common currency and politically suborn their individual national interests to the common good of the BRICS is a silly, silly fantasy. However, gold-backed settlement mechanism, where the trade surplus that China enjoys, as an example, with Russia, could be settled outside the US dollar system in gold, I think is a very interesting concept. I actually don't think it's going to occur, because I think as little as the Russians and the Chinese trust us, they trust each other even less. I could see a circumstance where Xi went to Moscow and said, you guys owe us the equivalent of $10 billion in gold, please settle up. And I could see Mr. Putin saying to them, well, here's 100,000 bricks. And I don't mean gold bricks. I mean settlement bricks.
Yeah, it's the other than U.S. bonds, which they want to get out of because of the weaponization of the dollar. But other than U.S. bonds, this is the only asset that they all hold, that's the same. It's completely fungible for them.
I just don't see them trusting each other enough to make this mechanism work, except for in a very, very, very limited fashion for a settlements mechanism.
I don't think it's going to be redeemable for the consumer, for instance. Right.
Correct. Correct. And ultimately, given that only 2 of the BRICS members run consistent trade surpluses, I don't think it'll be viable among the BRICS. At some point in time, U.S. hegemony gets replaced by the threat of Chinese hegemony.
Right.
I mean, this is just the nature of politics.
What's happening with real estate in China right now? I believe it's Zhongdong Group that is currently, the government has auditors looking at it, so it may require a government bailout, roughly $38 billion US. There's just so much going on, and real estate does seem to be collapsing in China. So what are your thoughts on China, and what are your thoughts on, Janet Yellen said we will never experience another crisis in our lifetime. Well, we already had the financial crisis of March of 2023. I believe that was just the first leg. If some other crisis hits us, could it happen anywhere on Earth and then transmit to all other economies? And what will be the speed of that crisis?
Well, the answer to could it happen is clearly yes. I'm not an economist. I'm a credit analyst. And from a credit analyst's point of view, what keeps the economy ticking along today in the way that it has in the past, with deteriorating credit quality and negative real interest rates, is simply confidence. Talking specifically about China, the Chinese economy is so opaque and the Chinese debt market is so opaque, particularly relative to the American market, which despite its faults is the most liquid and transparent market in the world, that it's difficult to draw conclusions about the Chinese market. We don't know anything about the credit quality enjoyed, if that's the right phrase, by the official banking sector in China. And the official banking sector in China is, at least allegedly, in much better condition than the non-bank financials in China. One thing that you can say for a system like the United States is that there's reasonably good feedback mechanisms. They can be, of course, ignored, which I believe they're being. But in China, where you superimpose a 10,000 person elite on 1.4 billion people, there is no feedback mechanism. You don't get to see until too late the stresses involved in credit or in provincial investments or in real estate.
And that
until it's
lack
too late.
of transparency translates into storing up a whole bunch of energy until everything falls apart, right? I mean, it'll happen all of a sudden because the public, nobody in the financial sector can see it coming. The government keeps it hidden, right?
Well, yeah, that's right. And the consequence of that is that what I choose to do, despite the statistical cheapness of Chinese equities, is avoid them because I'm relatively confident now that I don't know enough about them.
You know, just today, there's an article on Financial Times that says U.S. companies see China as uninvestable. And you just basically said that yourself. It's uninvestable. What happens when, this starts becoming a global thing and everybody wants to stay away from China as an investment when that's one of the things that has supported their entire stock markets and structure for the past decade?
You make a very important point. A lot of China's growth has had to do with incredible amounts of foreign direct investment. And to the extent that the Chinese themselves, for political purposes, discourage foreign direct investment, which they seem to be doing, and to the extent that there are no longer surpluses generated in China to support the level of growth that they have seen, there's a fairly ugly reckoning. It's important to note that Chinese society has been prodigious savers. Some of that's been forced from above, which is to say the savings have been socialized by state-controlled firms paying wages much below the world standard while selling products on global markets at world standard prices, with the surplus, the economic surplus, being expropriated by the state rather than having been enjoyed by the workers. There, I think, has also been a cultural tendency among Chinese people as individuals to be prodigious savers. If you look, as an example, at the fact that Japan is still nominally solvent, despite decades of negative growth,
right.
The tolerance of the Japanese citizenry for the excesses of their government and the fact that the Japanese economy has produced surpluses, which the citizens were willing to save, has, at least up till now, kept the system solvent.
But when
Japan and China, you have demographic trends, which is to say a rapidly aging population that makes you wonder how long this circumstance can continue, even if confidence continues. I'm not smart enough to tell you, of course, whether confidence will continue.
Silver, what do you see in the short, medium, and long term? Things could go along well for another. I believe that there's absolutely another leg to this crisis because of the rate at rates rising. How fast rates that Powell put up rates. It's never been done like this in history, where they just slam them up in such a short time period by such a percentage increase. There may or may not be another crisis, but I see spectacular things for silver in the future. What do you see in the short, medium, and long term?
I'm not one of those who thinks in the near term that a crisis will be good for silver. In my experience, in a liquidity crisis, everything gets sold off because the sale decision isn't made by the investor, it's made by the margin clerk.
Okay, so that covers the short term, yeah.
Yeah. I mean, that's really, truly problematic.
Yes.
If we have the liquidity crisis that you expect, I suspect that capital markets will respond the same way they responded in 1987 and 2008, which is to say everything will sell off. The policy response to that will likely be money printing on a scale that we've never seen before, and assets that have traditionally
responded. How many times have you said that since 2007? Money printing on the scale, which I'd say is currency printing. You can't print a store.
That's a good point. That's a good point. But we've also had, putting it in context, we've had GDP growth, and we've had amazing
keep up with the currency.
We've had amazing margin. Which is to say economic margin generated in the United States. At some point in time, you push on the string, and there's no push left. And so not the nervousness, I think if we do have a liquidity crisis, irrespective of the source, the policy response will be the same as the policy response before. The difficulty is that the negative impacts of negative real interest rates and quantitative easing and debt and deficits are cumulative and compounding, which is to say that we're pushing liquidity in the system system, or we would be pushing liquidity in the system the same way that we did in 1987, the same way that we did in 2008, but the system has many more encumbrances, many more imbalances than it had then, so that the response to the policy, I think, will be less dramatic on the good side and more dramatic on the bad side. Now, let's return to silver. Let's get away from macro and let's talk about silver. My experience with silver, and I'm not sure why, is that silver is a late cycle mover, which is to say in precious metals bull market, the trend is established by gold.
And then it drags silver with it later.
In the middle of the up move, silver begins to move. It moves faster then and much further than gold did. I assume that's because of silver's low unit price, which is to say when the bull market democratizes and people with less means want to participate, the easiest and best way for them to participate is in silver. I'm making this up, by the way, Mike. I don't know why this is true.